Yesterday we were talking about how we thought the market could trend higher today. It looked like it was about to break out and gave a lot back at the end of the day. A lot of slippage on Microsoft and Alphabet earnings. Towards the end of the day, one of the biggest slippage differences I've seen in a long time. There were no technical errors, just massive slippage. At the end of the day, the market makers just they were there all day, and then they just left on the Google and Microsoft earnings, and the order book went crazy, and it's pretty extreme, pretty disappointing results. Overall, a tough month. We're up on the month, $1,200, because we started on the 10th, and the strategies are down. We were up quite a bit today, and I'll go over that in a minute. It's very it's almost as if the market has a predatory algorithm to kind of burn everybody. The way it's trading right now, it's very extreme in the way it's trading. So up on the day, 275, down on the week, up on the month, and up on the year, quarter. In the hypotheticals, we underperformed. This is what the market looked like today. You could see almost got stopped out on Robot. Came really close, then reversed, and thought, okay, we're in for some smooth sailing. Up here, we had about 8 contracts. And it's one of those situations where you want to take profits. You're itching to take profits. You're up 12,000. We were up 12,000 at the peak, and it's not a big gain. We're not even up 200 points on the Nasdaq, and the S&P had taken out the 52-week highs. The Nasdaq was still down here, and so it's one of those deals where oftentimes we're in the situation and it accelerates. It could have doubled our gains and taken us to new equity peaks. We're up 12K, and with 8 contracts, it didn't have to move much further. A quick move higher at the end of the day, like we sometimes see, could put us at equity peaks. So we held on, and we had this crazy chop, and it went just wild slippage, sell-off, stop running. Another thing that we said yesterday is the market always seems like it has to have a stop run. It can't get through a day without a stop run. Yesterday, we've been seeing these just stop running price action. If it's an up day, yesterday was kind of a sideways day. Today was kind of a sideways day, tilted higher, and then just massive chop at the end of the day. And so it had the stop running price action on those earnings, and just a wild order book. I don't know if you watched the order book down in that time period, but it's pretty wild. And so it seems to be wilder than I've ever seen it. Some of the worst earnings slippage I've seen, and so it can go our way on those as well. And so today it went against us, and for the market to sell off, hit a lot of strategies out, and then bounce right back to where it was near the highs is it makes you think that, hey, is there some algorithm that's just trading against you? And it can certainly feel that way. Notable is the ticks, very compressed on the upside. We have not had many 1,000 tick readings lately, and you can see advanced decliners were weak as well. But let's go over the trades on the day. I want to explain to you also in this video why we didn't grab profits at 12K or 10K, but we may in the future. I'm going to use the money management algorithm tool to help us determine if that's a good strategy or not. It has not been as good. It's best just to hold it. Like I said, you could get out here and it could have doubled, and if I would have gotten out here, I said, man, I got out with 12K. I didn't want to get it back, and then it doubled and was near equity peaks. We're at about a 26K drawdown. So if it doubled here and got back to equity peaks, it would be even more difficult situation because we'd be even more out of sync with our strategies. So let's look at the strategies, and I'll show you the money management algorithms as to why we don't have these daily profit targets, but why we could possibly in the future. And so if you go over this, the S&P wasn't that active today. Tick count trend took a couple of trades. It was down 850 on the day. Mirror and gap fill had some nice long trades at the open, 475 and 675. And then opening chop, minus 250, and opening chop 2, minus 200 on the day. NASDAQ strategies, here they are. Viper was on a hot streak. It had 1, 2, 3 winners. Fourth one was a loser. You see that end of day. We're going to run stops now on these earnings and then bounce back attitude. Gap continuation came in. It was profitable. These strategies were profitable, Viper, gap continuation, but could have been a lot more profitable. You can see, you see up 158, but the amount of chop in relation to the chop is almost greater than the actual gain. If you put a line right through here, you can see it's just a choppy afternoon, a choppy morning. The only real gain was from here to here in the middle of the day, and so you had a gap up as well. And let's look at Robot. Had a nice day. I thought it might do a little better. EVP1 was going along here. One of the nice trades on the day. The market was coming back here. I thought it was going to do one of those morning stop runs, and it didn't. It recovered, and so it looked smooth for the day, like I said. And then the sell-off at the end of the day got this EVP1 short. This EVP1 stayed long, so that was good. It held its position into the close, plus 1630 on this trade. This setup long short was only plus 10. And tick reversal was going along really well. Had a nice start to the trade, and the market had to mean revert at the end of the day. Tick long aggressive 2 days in a row where it stops out, gets stopped out on the same bar and price. It gets stopped out here, It has tick long aggressive's number. Bounce reversal, same thing. Some of our new strategies, just hitting those new strategies up, and so down on those trades as well. Thought we had the potential to surge into the close. Let's look at the money management algorithms. So here is the static data exported. This only goes through February the 21st, but it's a 3-year back test. We're going to study why we shouldn't have profit targets on the 3-year back test. This is what the money management indicator looks like. I now have the market position, so you can see this is MMMPNQ. This is the net market position of the NASDAQ. You can see long all day, long 3 from the start, then 4, 5, down to 4, 5, 6, and then 7, 8, 7, 8, and then, gave it back. You can see this disaster at the end of the day. S&Ps plus 2 to minus 2 were the net positions on the day, and this was between 0 and 8 net positions on the day. And here's what the equity curve looked like. It peaked right here, and then it gave it back. Usually when we're up this much, we don't give it all back, or we might give half of it back, giving us the chance for it to surge once again, but it just flopped on us. And so still working on this, still working on better money management algorithms. But what I do is I export this equity curve right here, and I put it into this chart, and I can test strategies like this, the static equity curve. So here's what this looks like. If don't trade on FOMC equals 1 and don't trade on holidays equals 1, which means we don't trade on those. We don't trade on FOMC, we don't trade on a holiday, and the date is not equal to the date of 1, then we buy next bar, buy 1 contracts, this bar on close. So the first bar, we're getting in on the equity curve of the first bar. This is not a long short strategy, this is the equity curve that we're testing. So we get in on the equity curve. If the close is greater than 12,000, then sell this bar on the close. So let's look at the results for that really quick. And you can see 1.497416 over the last 3 years. Like I said, this is testing the equity curve. So we're going along our equity curve. $25,000 drawdown. This number here is what I look at. 58.87. Here's the equity curve. Now let's look at removing this profit target. Now first, I want to go over this as well. If you look at this, you have a $12,000 profit target. Your largest winning trade is $16,000. And on October 13th of 2022, let's scroll back there really quickly. You have to understand what you're looking at. October 13th of 2022, you had this strategy right here. It exited when it was greater than 12,000. So this bar before it was at around 11,000 something, and then it surged. So this surged. Let me test it again here. You can see it got at 15,850, and the bar before that was 11,800. So 11,800, it's not there yet. and then the close of the next bar is 15,850. So this only updates on a 1 minute basis. That tells you how much can happen in 1 minute, almost $4,000 move in 1 minute. And so that is the equity curve. What happens if we take out that? Now, like I said, this is updated through Friday, and it's a longer term back test of just using this methodology. Let's take a look at the results once again. 58.87. What if we take out that profit target? And I'm going to comment this out. So you can see how this improves it not to have any profit target. This number is 60.56 instead of 58.87. This number is 1.6 million instead of 1.497 million. This number is 2.44 instead of 2.34. The average daily profit, average trade net profit, since it takes one trade per day, it represents each day that it trades, it's 22.30 instead of 20.73. You might argue the case that there's not a huge difference, and it's better than giving back, and so you see the largest winning trade is 40,000, and so you'll miss if you have a $12,000 profit target, you're going to miss big days like this. And so this profit target that we're testing is an end of bar profit target. Let's look at a $5,000 profit target, for example, what that would look like. So we looked at 12,000, we looked at no profit target, now we're looking at 5,000. So with a $5,000 profit target, this really goes down. This goes from 6,000 area to 31.25. Total is 1.6 million, so it's half. Your average day is half. This number goes up a little bit from about 56 or 57% of winning days because you're taking profit quicker. You get 61% profit. Well, you could probably increase this to 90% if you had a $1,000 profit target. Matter of fact, I'll check that as well. So here's what it looks like if you have a $1,000 profit target on the close of 1 minute bar. 281,000. This goes from 6,000. 1/6 of the profit, really. $388. 83% of your days will be profitable. So if you like to be right most of the time and want to give up, 6 times the gains, your equity curve would look more like this potentially. Your losing days would still be large. You'd have a $12,000 losing day. And when you have that happen, you have to have over 12 winning days to make up for that. Your biggest winning day is 28.50, and so this is the reason I've found that you have to let it go, let things run. We will test it more with the VIX being lower and ranges being lower, and find a way to lock in profits. Psychologically, it's better if we can do that. But we want to let the strategies be as raw as possible. You don't want to over-optimize it and have too many rules. We keep everything pretty basic. And so that is the premise in which we work. So with this extremely violent market action, we are still up on the month, and we have 4 trading days left. Tomorrow we are turning it all off. Trading the FOMC trader, if you're a subscriber, I sent that out to you. It risks $1,000 to potentially make as much as $5,000. And so it's a new strategy, not a big sample size, but we will turn that on. It won't trade until 2:30 p.m. Eastern Standard Time. And so it'll be nice to sit back and watch the market in a more casual way. And it's been so choppy lately, it's been difficult to watch all this. And so we will still trade it with the FOMC trader, but just one trade and risk one contract per 250K or 1 micro per 25K. Or don't trade at all. We don't trade our stock index portfolio 24 on FOMC day. So one more thing I want to go over is the money management algorithm setup that we talked about yesterday. And I have 2 variations of this now. This basically just trades one contract when at least 4 strategies get long. This is what it did today. Had we just traded this, it would have been, this is just kind of a peaceful way to trade. It doesn't make as much, but it beats the market historically. The last few years, if you trade this long short, it would have been up $925 today. and at equity peaks, trading one contract. And so basically it's just, it would get out by 15:45, it wouldn't trade through all this. And so it's kind of a peaceful algorithm, I guess you could say. And this is the version that increases and decreases the market position on the NASDAQ as this increases as the market position increases with a 1 bar delay. So for example, if we got in, we had 3 contracts go long at the open of the 936 bar, and then the 1 bar delay didn't see that until 937, so it got in at the open of the 937 bar, and so buy 3 at 15,633 instead of 15,622. It lost 11 points there, but on average it does pretty well. You can see 1.136 just on the NASDAQ, $27,000 drawdown. Now this is just the NASDAQ. The other static data we looked at was the S&P and the NASDAQ. So, and the other strategy we looked at was just trading the equity curve. So the average trade net profit represented the trade for the day. This represents all the trades during the day. So it's a different algorithm. You can see it got long 3, and then as the market position increased right here, got a box. As the market position increased right here, it increased 1. It increased again. It increased 1 there, and then it decreased 1 by exiting at a profit target. Then it increased again, and you can see as it goes up, it increases. It goes down, it decreases. And what would it have done today? So today, it would have been up $5,000. Keep in mind, some of these trades were during a very high slippage time period. So this exited at 1557. That wasn't a volatile time period. This also set a maximum contracts of 5. I said we got in 8 contracts today, but this setting here is to only trade a maximum of 5 contracts. I set that up right there. So you could do 8 and try that as well. But so I'll have more on this. A lot to absorb in this daily video. A lot of research I'm doing to continually improve my trading systems. And so looking forward to Fed Day tomorrow. Hey, David Bean here. Welcome to Capstone Trading Systems YouTube page. Be sure to subscribe to join our community of algorithmic traders. We are real money traders. We share our winning streaks, we share our losing streaks, as well as market updates, strategies, and coding tips.